Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Let's get into the action today. So what you're seeing today on the S&P 500, and I want to focus on that basically today, is just a very quiet sideways day for now. Markets are in an extremely tight range. However, I want to show you a couple different things that may tell us where the markets will go into the end of the day. All right, so first and foremost, notice what a tight range we're in on the SPY, which mirrors the S&P 500. It's the tracking ETF. And again, the first thing you should notice is not only the tight range, but you have to go back to yesterday to see this low that moved up all the way to this high. So again, low to high, take this high, connect the highs of the day today, and look at what you get. You get a trend line right down here. Okay? So again, a sharp move up like this, followed by what we call here bullish consolidation, is leaving room for this market to pop potentially into the end of the day. That's where the odds should be at. Now, you have a couple other things that would make you think that. The first thing being that today's volume is going to be insanely light. All right, we already are past 11 a.m. here, and we've only done about 18 million on the SPY. That's only going to get lighter throughout the day as people leave for the holiday. But the other factor that you have to remember is that the markets like to close at new all-time highs. The Fed encourages it. When I say encourage, generally they want to push out buy programs at certain points to get the markets to close at key levels. What would be a key level today? Well, if the S&P closed at a new all-time high, which would be just above this pivot high right here, that would give the media great pumping action over the weekend, into Black Friday, over the holiday, which again would get more people spending. So again, in general, even though the markets are kind of going sideways here, the odds are favoring an end-of-day move up by about a 75% to 25% ratio. So about 3 to 1. 3 to 1 ratio favoring the upside. Now, the one thing I want to just say to you is if by chance we don't see that happen, all right, if the markets come back in a little bit, close negative, then I would say you may have a change in character in the markets, which could tell us of downside coming in next week's period. Right? If you don't see that and you see the markets go back up and do out what I've said is a 3 to 1 ratio likelihood of playing out, then it's same old, and you expect, again, neutral to upside next week. All right, so this really should lay out every game plan and based on what you see today into the end of the day going forward. All right, guys, don't forget, come join us here at InTheMoneyStocks.com. We have free email alerts that we send out. Come to the website on our Rant and Rave blog and sign up for that. In addition, if you want the Research Center where you get swing trade alerts, text message, email alerts, take the 7-day free trial to the Research Center. Come join us here at InTheMoneyStocks.com.